Hello, guys. Welcome to this live stream. So, we're kind of doing a market wrap up for the week. Normally, I would actually go through this and look at what the markets have done on my own. But I thought, you know what? I'm going to go through it with you guys as well so we can kind of wrap up what happened this week. It's been an incredibly volatile week again in the stock market and the bond market. And we've got a lot of different things that have happened that we should be looking at. So I definitely want to go through that. So let's turn on a light here so get some more light. So basically, I'm going to pull you over now to Yahoo Finance, and we'll go through it. So the S&P finished up flat, but if you look on the week, it's actually down. So today was options expiration, so it's always incredibly volatile. So it opened the week at 4,016, closed at 3,900. So that's a loss of over 100 points, and it closed below that watermark of $4,000. So that's not good. That's not good. And the Dow has been breaking support as well this week, or drifting and trying to stay below 31,000, which is just absolutely insane. So if you look at the Dow opened up around 32,001. So it's down nearly 1,000 points in a week, which is a substantial decline to say the least. So even though we were flat today, incredibly volatile day, but that was because of options expiration. Like if you look at this, like it rallied pretty much, 800 points from from 1:30 p.m. in the afternoon. Incredibly volatile. And the Nasdaq, of course, everybody's favorite. Hello, Trader 586. Nasdaq, everybody's favorite. I should mention, I keep forgetting. Doing this part, but please click that like button if you're listening to this. It just helps get the videos noticed on the browse features with the YouTube algorithm. Anyway, enough with that. I've actually swapped out the microphone again, so we've got a different microphone now, and it should sound better because I did some tests earlier and it sounded much better than the other mic I had, which was more expensive, which was just strange. This mic was, I don't know, I think $120, which is still not that expensive, and the other mic was 180, and it was terrible. So anyway, if we look at the 5-day, you can see the Nasdaq opened up around 11,700, closed around 11,354, and we were getting really close this week to breaking 11,000, which is just insane. So yeah, I mean, it's absolutely insane, and we've closed under a major support, which we'll go into in the chart in a minute. But what else has been happening? So I want to see what's happening with crude oil. I want to see what's happening with bonds. All these different things are things we should be keeping an eye on. So if we look at some of the corporate debt actually going up, this has had a fair bounce. This iShares Canadian real return bond ETF. If you look at what's happened over the past month, it's had a fair bounce upwards. So is this a flight to safety? Who knows? But if you look at the 1-year chart, it certainly doesn't look like a flight to safety at this point. It's just declined so much consistently over a long period. And you can see PFIX, which is interest rate hedge, is up after hours 1.5%, but down 6% today. So that usually moves downward when the bond market moves upward. And the UVXY, the VIX short-term futures ETF, that was incredibly volatile today. It was up nearly $18, closed at 16. And if we look on the week, it's pretty much bang on flat. Like the volatility was swinging all over the place at the start of the week. It was going down significantly. I bought the dip here, definitely. that was gladly buying the dip on UVXY every time I get a chance at the moment, and that's not trading or financial advice. But yeah, pretty much flat on the week for volatility. I think really we're overdue some sort of bear market rally and that's coming. And we had a slight one at the start of the week, but it was so short lived. I mean, the first resistance, it just all the indices reject and everybody just starts selling again. So some of the JNK down. Let's see how junk debt fared for the week. So it closed lower. So junk debt was opening at 25, a 25, 20, 95, 25, I should say. And now it's at 94.70, so that's down even more. What are we looking at? Wow, the yield on junk debt is now at 6%. That is insane, guys. We were at like 4% just a couple of months ago. So this is really going to put the pressure on companies that are have a junk debt, and a lot of these companies are the cruise lines that are in there. I noticed. I really should get a list of what's in JNK because should be available somewhere, I guess, off Bloomberg. So what else? So the Canadian banks, let's just pick one of them. So they're reporting earnings next week, so that's going to be interesting. I'm actually dreading it with my short position because I'm thinking that I could possibly get stopped out. I think that because my stops are all at break even, I think that I may get stopped out of some of these next week because fact is that they're just liars. The banks. I'm expecting that their guidance is going to be toned completely down because they're going to be selling less mortgages, but they probably won't. They'll probably just try and peddle the same stuff over and over again, and they'll probably be saying that credit card debt and everything like that is high. So they'll find a way to worm their way out of it. These people get paid these salaries to do these things, right? It's kind of just the name of the game. So Mr. Fool, you're not late. We've only been going like 7 minutes already. What the hell? Man, time just flies when you're doing this. So yeah, the banks, some of them up, some of them down. Let's see what First National did for the week. So so it closed slightly up by the looks of it. Yeah, so pretty much flat though, to be honest. Like 30 cents is not that much. So let's see what's going on with treasuries. Treasuries down. So there's a flight to safety definitely happening there. We closed up around 3% last week. A lot of the metals and the miners down, but interestingly enough, we had a slight bounce. I think silver's up on the week, so let's have a look. Yep, silver is up on the week, so started off at $21, now up at 21.87. So that's a nice gain there for silver, although it's at such an insane level. Anyways, it's just kind of mad. And then gold is pretty much holding steady right now. And I think there could be more downside to gold, to be honest. And I'm long-term bullish on gold, as you guys know. But when the stock market tends to crash, people tend to sell what's liquid, and gold is sold to cover some of these margin calls. But it's interesting because it's up significantly on the week. We started off at 1808. It's now at 45, so 38 buck gain in a week. That's not bad at all. And it was an incredibly volatile day today. To be honest, I'd already got this stream ready, and it's just so this is what's interesting. So let's see what's going on with crude for the week. It's at $112 right now. It's up $3 from 109. It's up, but not massive volatility. I know there's been a lot of volatility in gasoline futures, and that's really what everybody's interested in. What is happening with that? So 5 days, we opened up actually at nearly $4, 393 for the week, and we're closing at 383. So we dropped 10 cents. So that's relatively flat as well. So most of the commodities are just in a holding pattern right now. Lots of companies, but the some of the big hype stocks were just decimated today. They made a slight recovery, but the likes of Tesla were hitting new lows today. Tesla at one point was down over 10%. It was short sell restricted actually, which is just insane. So Tesla was down and it was around 633. And if you look at a chart right now, I mean, it just doesn't look good, does it, guys? I mean, you've gone under this support here, so it looks like all of this here, which was just the bubble, it was just really the bubble. It looks like it's over for Tesla in that respect, but who knows? I may say that, and we may have a massive rally next week. I saw some conflicting information there. It's always hard to tell. Options expiration, I never generally trade these days, but it's still got a long ways to go to get back to a level like $150, which would sort of be an okay price for Tesla. It's hugely overvalued. I hate how it's just keeps dragging me up. But let's take another one of these hype stocks. Trying to find one here. Oh, here we go. So Beyond Meat is at $24. That's insane. Shopify, the Canadian love that everybody loves tech stocks. So that's pretty much flat on the week by the looks of it. It was no, it's down. So it started at 383. It's at 363, and today it looked like it traded all the way down to $341 per share. And if you look at this, it's completely erased its pandemic gains. And if you look, when stocks crashed in March 2020, that's literally where we're at. So it's insane, guys. Shopify going from 1700 nearly all the way down to 363. That is nuts. It really is nuts. And you've just got to think along the lines, guys, of people are losing significant amounts of money in these markets. There is a lot of money that is being lost in these markets. So the thing is, and a lot of wealthier people have money in the stock markets. Like I said last time, a lot of people have gone to managing their own portfolio because they think they can do it, because they can buy all the ETFs, and they read a couple of books and they think they've got it nailed. What those people don't realize is, like I've said, and I'll keep saying until the cows come home, is that basically, obviously, it's all psychological. Trading in the markets, as Trader 586 knows, he's got more experience than I have, is all psychological. If you've got the wrong psychology, then you're not going to do well in the markets. It doesn't matter how good your stock picks are, you're just not going to get it. And to be honest, that's why I personally hate passive investing. I think passive investing is a bubble. I'm with Michael Burry and Peter Lynch, the people who are saying it's a bubble, because essentially it's like I said, guys, when I'm building my portfolio, I look to think I'm a owner in the business, like I own part of the business. So you got to think like a business owner instead of thinking I want the stock to go to this price or that. You're looking at whether the company is in a good position, whether it's growing, and you sometimes have to make difficult decisions. You have to, unfortunately, take a loss after an earnings report, which is never good. But the thing is, as we've seen with Walmart, you can report earnings continue to slide 10, 15, 20%. But it's not really about that. It's about the future. You're looking to gauge what the future is going to look like for these companies. And that's why people just don't get it with tech. Like, there is going to be a lot of people buying into tech, and I may be completely wrong on this, because at the end of the day, if they come in with loads of stimulus money and everything like that, where's it all going to go? It's going to go into tech. So it's kind of one of them things that is just, it's difficult. But I personally, I was in tech like in 2020 because I knew that these stocks were the ones that were likely to do the best because of the stimulus, because of the emotion that was at play, and because of the environment we were in back then. But I sold those long ago. And you know what? Now the environment is completely different. Like, I would not be looking to go into tech. And that's why people are selling tech. And, a lot of these tech companies, it's like the dot-com bubble for them. They're never going to get back to these highs. And I'm not sure that that's really people really understand that. Like, that's what happened in the dot-com bubble. But let me show you actually, guys, because there's one stock that is incredibly interesting chart. It's called Fuel Cell Energy. So this was a dot-com bubble stock, and it still has some volatility, and it still spiked during this bubble as well. But if you can barely notice the spike on this, but if you actually look on the yearly, you can see it got all the way up to $11 again, double top, that famous double top that we see time and time again. But anyways, if you look at the maximum chart, look at this thing during the dot-com bubble. It went from, what was it, 261 all the way to 6,928, and then it went all the way back down, and it took a long time for that. And here you've got the stimulus money coming in, and then it took a long time to fizzle out, but it never got back up there, and then it's just been flat. So had you bought at any point, you're pretty much at a loss. And it's been like that for 22 years, guys. And I'm not sure that people really understand that that's really what the environment is going to be like for a lot of these different companies. So it is G Ellis says, why don't you learn how to trade options? I do buy options as hedges occasionally, but I'm not a big options fan, to be totally honest with you. But yeah, I do buy them occasionally to hedge. Markets got saved again. Revert to me says down mostly. And Viola at close, what a joke. Yeah, I mean, there was a lot of volatility in the market. It was down significantly today. And you're right, it did get saved. It was really interesting, but it's the options and everything like that. But let's just quickly flick to the Nasdaq, and then we'll kind of wrap it up. And I'm going to be doing a live stream later here on another topic, probably around 7 p.m. Mountain Time. I got so many different news stories and stuff that I want to cover. Oh, Trader 586 says he can remember fuel cell. Oh my God, I remember the hype on that versus Ballard Power Systems. And it's never got back there. Like, imagine holding on to that for 22 years. Like, what a nightmare. But people won't take a loss. Retail investors, they cannot take a loss. If there's one thing they can't do, it's take a loss. They're either panic buying or panic selling. So if you look at this chart of the Nasdaq, we're looking at a daily chart here, and I've got the major supports plotted here. So the next real line of support that I'm seeing is around 11,000. So that's going to be our next support level for the Nasdaq. We broke 12,200, which was a support level, and we've closed way below that this week. So that's not good news. And, we did basically go back up there. You can see on the chart, we rejected and came back down and closed below. We've had a wick, though, which is indicative of a reversal, but it's just so hard to tell with the options volatility today. So it's really difficult to tell, but this could be bullish. This could be because if I see that wick like that where it's gone, it's zipped up, whipped everybody out, then zipped right back down and whipped everybody out. Basically, just generating liquidity when you're in a range like that. So a lot of times when you get a wick like that, it will then just suddenly break out upwards. We could go test this 13,000 level again. Who knows? But I think we're kind of overdue a bear market rally when you look at how fast this thing has fallen. And we haven't seen a rally since March. The last rally was through March to April, and for pretty much 2 months now, we've just had solid declines on the Nasdaq. And those rallies, they can be brutal. They can be really brutal. So they can be really fast, is what I want to say, just like the other one was, because people panic buy. And you got a lot of retail people that don't have a clue what they're doing and are still open to losing a lot of money. I just put this on there to show how much the Nasdaq is down. It's down 29.44% to today's close, over 30% it tipped into today. So that is really a massive decline and a sign of things to come. So we'll quickly flick over now to the bonds. Let's see what's happening with the yield curve. Okay, so you've still got the 10-year inverted over the 30-year, but it's down significantly. Like the 5-year was at 292 a couple of weeks ago, and now it's at 272. So that's going to affect mortgage rates. I don't know if we'll see mortgage rates going down or not because of the risk premium that's involved, but who knows with the banks. The 10-year is inverted, so I would guess the other ones are inverted too. In between on the yield curve, the 2-year is catching up, is screaming to catch up with the 5-year, which I just find insane. And then you've also got the 1-year that is coming up now at 2.5%. So they are moving up, but it's not. It's it's been relatively flat for the past couple of weeks now, whilst we've had this stock market debacle that's been going on. So it's going to be very interesting moving forward what happens. So we'll see what happens, and we'll continue to monitor it. So basically, I got two choices for you tonight, and you you can leave a comment on this video with which one that you want to see. So I'm trying to open right now so I can actually see, because I got so many streams, and I'm only going to put one out today. So we can do the Canadian real estate fraud one, we can do the home equity line of credit disaster one, or we can do the business bankruptcies. So those are your three picks: home equity lines of credits, fraud, business bankruptcies. Leave your comments below after this video, and whichever one, I will do it at 7 p.m. Mountain Daylight Time. We'll be back here and we'll do that. Please click the like button on this stream so more people see it. And guys, leave me a comment of what you thought of the new mic. Hopefully it sounded much better. I'm going to listen to this after and make sure. But anyway, guys, thank you so much for watching as usual. I will see you in the next video. Peace and love, guys. Bye-bye.